Our next speaker is Mr. Jimeet Modi, founder, promoter and CEO of the SAMCO Group. Mr. Modi has over 15 years of experience and has an impressive educational background, being a rank-holding chartered accountant and a CFA charter holder too. He will now present the wealth creation blueprint in India's Amrit Kaal. Over to you, sir.
Good morning, everyone. I'm glad that I had a warm welcome. Even though it's still 9:30 in the morning, I saw a lot of people at breakfast. And I think they were struggling to make it here in time. But yeah, thank you so much, guys, for taking the time and being here. And thank you so much, MFDAC, for giving us the opportunity. But I also have a complaint. You've given us a very tough topic. You've given us a topic where, we've got to talk about how India is going to dominate the next decade. And, at SAMCO, we internally, very often, we call this our Amrit Kaal. Okay, and that is what I'm going to talk about today as to why we think this is going to be our Amrit Kaal. And we're going to talk about what are the factors, what you can do, how do you create wealth, and what's going to happen, and what we think are the trends to play in the next decade or so. So before I start my presentation, I'd like to sort of play a short video which sort of helps you understand why we have come to be a dominant country in the global ecosystem.
Europe has to grow out of the mindset that Europe's problems are the world's problems, but the world's problems are not Europe's problems. The world cannot be that Eurocentric as it used to be in the past. Look, I don't think we're sitting on the fence just because I don't agree with you.
How many of you all have heard him? Yeah, I think we should be very proud of this man. I have not seen an external affairs minister as gutsy as Mr. Jaishankar. And for him to go on a global stage and say, boss, your problems are your problems, I will look after my country. And to have the guts to say that and stand up for India, I think that is a representation of the time that we are in. And that is one of the reasons why we say we are in an Amrit Kaal. We have a combination of a fantastic Prime Minister and a fantastic judiciary ecosystem and the right team to manage the country, which is why we say we are in an Amrit Kaal. So as I said, what are we going to talk about? I will give you a little bit of data points to say as to why we will dominate and what is happening in India vis-a-vis what is happening in the world. And then how do you play this? Why will we dominate? I think first, before I go and explain as to why we will dominate and what it means for us in the mutual fund industry, I want you all to remember a simple rule of thumb. Over the very long term, Mr. Buffett actually gave a very good indicator. He said, over the long term, market cap to GDP will be 100%. Okay? So if today India's GDP is $3.4 trillion, our total market cap is $3.4 trillion. It can go up by 5-10% up or down, but by and large, that's what it's going to be. So this is the simple rule of thumb, that we will trade at 100% of market cap to GDP, and I want you to remember this as I go forward in my forward slides. And this fundamentally is a function of two things, GDP growth. So we internally believe that we are going from $3.5 trillion to $8.5 trillion in the next 10 years. And this is going to be primarily a function of two things. One is factor production, and second is population. And I think this is very important to understand, because when we say that India is going to have Amrit Kaal, you also have to understand that somebody else is going to have Rahu Kaal. It doesn't happen just one way. It is one person has Amrit Kaal, the other person has a Rahu Kaal. And why? This is projected population across the world in the next 100 years. You see China, today they are the largest population country in the world, but they are projected to half in population. They will go down by 47% in the next 70-80 years. They just don't produce enough kids. Similarly, and that is the case for a lot of European countries, a lot of Southeast Asian countries. US only is one of the shining spots where they still think there will be 17-18% growth. because they keep having immigrants. A lot of our children, especially from Bangalore, from Karnataka, they leave India and go to the US, and that adds to the productivity and the GDP of that country. But fact of the matter is, the fundamental reason why this is India's Amrit Kaal is because we have people. We have people, we have a favorable demographic that no other country has. In other countries, literally, I may fall short of saying that people are actually dying much more than people are producing children for future growth. As I said, India, we have a young population. We will continue to grow. The left of the United States, we are here in India, and you look at China. We firmly believe that the next 15, 20 years are going to be really, really tough for a country like China. And for us, the fact that we have a young 25 to 64 population is going to work tremendously in our favor. I think one other factor is productivity. I think the biggest change that we are seeing over the next 20 years or the next 10 to 20 years is the fact that the number of people who are becoming literate and educative are far more than it has ever happened in the past. You will be surprised that today an average child goes to United States to a school for 14 years. In India, that's only 6 years. Only 6 years we go to school. In the United States, that number is 14 years. And we believe this number, I think with the current government's focus on education and growth, this number will go up to 12, 13, 14 over the next few years. Today, even our house help wants to send their children to school for 8, 10 years. They don't want people to simply drop out of school in primary. And I think that is a big change that's happening that's going to drive productivity. Infra. We hear so much about that in the media. But fact of the matter is, we've already achieved electricity for all. India as a country today has about 98, 99% electricity coverage. It is not that infrastructure. So we've actually built great infrastructure in the past 5 to 7 years. But fact of the matter is, literacy and education are going to be a huge factor for growth. So fundamentally, if I'm saying that we are going to have the fact that we have great population in our favor, and education and literacy is going to drive productivity in Indians and therefore result in a lot of growth. What does this mean for the market? As I said earlier, we are at $3.4 trillion in GDP in nominal terms in India, and that is what our market cap is. It's exactly pretty much the same. We are at a 100% GDP to market cap. And today, as we stand in 2023, the beginning of 2023, I think I would like to give you a correlation to a time about 70 years ago in where the United States was. So after the World War II, the last war of the World War II was the Korean War. Once the Korean War ended, the United States was actually the best placed at that point of time because they were fairly neutral. The war had the highest impact for the UK, for Europe, for Japan, for certain other parts of Southeast Asia, but the United States was fairly insulated. In that period, post-World War II, from 1950, the US Dow went from a level of 90 to 1100 in a span of 11 years. From 1950 to 1961, the US Dow went from, the Dow Jones Industrial Average went from a level of 90 to 1100. So that was 12x growth in a short period of 12 to 13 years. And that is the cusp that we are in today. Today, last year, we don't clearly have a world war, but we have an economic war of sorts that is playing out between China, US. There's intense tension. And as I showed you Jaishankar's video at the beginning, because of the fact that we've stayed neutral, we've not taken sides, we've actually let the entire political situation in the world play out in our favor. That leads us to believe that India is in 2023 where the US was in the 1950s. There is an opportunity for us to go 7, 8x, 10x from here in today's, even from today's markets over the next many, many years. And understand one thing. It's very important to recognize that when you have an Amrit Kaal, okay, you have to make the most of it. The US, as I said, went from 1950 to 1961, the Dow went from 900 to 1100. But then for 13 years, it did not rally. From 1963-64 till 1978-80, there was just no movement in the market. The market went completely sideways for 12, 13, 14 years. So we've got to recognize that when it's our time, you've got to make the most of it. And as I said, we believe we'll go from 3.4 trillion to 8.5 trillion. One more thing that is going to play out, I think we firmly are of the belief that interest rates in India are on a secular downward trend, even globally. I mean, while there is inflation in the short term, over the next 12, 18 months, there will still be struggle. But we are not going to live in an extremely high inflated world because there is just not enough number of people in the world. You know, there is downward pressure on population, there is downward pressure on consumption, which is going to keep inflation in control. And because of which, interest rates will actually go down. So, and what happens when interest rates go down? When interest rates go down, valuations go up. When Buffett, in the prime of his career, he used to rely on the market cap to GDP ratio as 100%. Because he used to believe that the steady state interest rate for the US would be about 3.5%, 4.5%. This is the US market cap to GDP. Today, they went all the way up to 200% when interest rates fell all the way up to 0.5%. So there is a possibility that even for us in India, as interest rates decline, we may trade at 120, 130, 140 times market cap to GDP. And what does that mean? That typically means that you are going to get 12 to 13% CAGR at least in the next 7 to 10 years in equities. Now, if I'm saying that there's going to be a 12, 13% that is possible in equities over a 10, 12 year period in the Amrit Kaal, and I'm saying that typically interest rates look to be on a downward trajectory because of a variety of factors, because consumption is falling, the number of people in the world are falling, so on and so forth, then our belief is that equities is the fundamental way to play this. In Amrit Kaal, you have two choices. Either you can have Amrit or you can have water. तुम अमृत पियो या पानी पियो. तुमको अमृत चाहिए तो you need to have equity exposure. If you don't have, you can very well say that, oh, the next 10 years of India are going to be the best in the country, etc. But if you are going to be stuck with water, this Amrit Kaal is going to mean nothing to you. You've got to make sure that you are holding equities, and that is the fundamental way. One thing that I often tell people is that in this day and age, we are a young country. We are a country where our median age is about 28, 30. And very often people say, and distributors like yourself often tell investors, acha, asset allocation karna hai. So general rule of thumb is 100 minus your age should be your equity exposure. Hai ki nahi? Which means what? That if you are advising a 30-year-old, you are saying, boss, 100 minus 30, 70% only should be your equity exposure. You've got to understand. We often, at SAMCO, we give a new formula. We said, boss, jitna bhi aapka age hai na, minus 100 minus your age plus 30 kar do. So if you are 30 years old and you are doing 100 minus 30, you add back 30 to get 100%, and that should be your equity exposure. Because you have 30, 40 years ahead in life here. You are a 30-year-old guy. तुमको थोड़ी कल रिटायर होना है. 60-65 साल का टाइम है. You should be 100% in equities. You cannot be 70% in equity. You are a fool if you are 70% in equities. You know why Warren Buffett is Warren Buffett? I don't know how many people know this. That man, at the age of 65, had 99% equity exposure. How much? How many of you here have 99% equity exposure? Barely 10% of this room. And I would like to believe that you all are a lot younger than Mr. Buffett was at 65. So this is an average age of 40, 45, 50. And still, predominantly, people are going to be at 50, 60, 70%. So I understand that in the short term, not holding equity is going to be risky. There is going to be volatility. But in the longer term, not holding equity is going to be the biggest risk. It's going to be criminal. As I said, it's important to be fully invested, have 80 to 100% equity exposure. It doesn't matter what kind of fund you choose. You like flexi, you do flexi. You want large, you do large. You do mid, you do small, you do ELSS, you do whatever you want. But fundamentally, in the Amrit Kaal, it is important for you to have a predominantly large equity exposure. And what trends should you play? See, what is going to happen in the next 15, 20 years? So, as an AMC, we try and look at large trends that play out over 10, 15, 20, 30 years and try to sort of use those tailwinds behind us to make a ton of money. The first, people have been shouting, and you'll see a lot of news and hangama, manufacturing, right? You see, it was manufacturing is the future for India, etc. On the contrary, we believe that the next 10 years, services will actually be a much, much larger portion of the economy and not manufacturing. And I'll tell you why. I have some evidence to prove. This is on the left, top left corner, you'll see United States. On the bottom left, you have Japan. And on the bottom, on the right-hand side, you have United Kingdom. And how their economies have progressed over time. So the green color typically denotes the services portion in the economy. As you see from the 1800s to 2000, the percentage of services consumption in the economy continues to grow up. Because as economies grow, as India becomes a powerhouse, services will continue to be a much, much larger portion. You look at agriculture and manufacturing. Agriculture is in blue and manufacturing is in red. It becomes such a small portion. So today, in the United States, about 75% of the entire economy is services. Same for the UK, same for Japan. What is it for India today? We are at 50-50. 50% of our economy is services. Roughly 20%, 21% is agriculture, and the balance is industry. So, this 53% we believe will probably go to 70-75%, and that is a big trend to play. So, and this is directly linked. This is also being seen in our data. Most of our growth today in India is coming from services. So services is growing at 8.5%, agriculture is only growing at 3%, and in industry is only growing at 5%. So we are predominantly going to be a services economy. Today the market cap split of the Nifty 500 is 48% is services, 51% is manufacturing. We think this is going to go the same way as in a lot of developed economies. Services will become 70-75%. Manufacturing will probably be about 15-20-25%. To give you a little bit of case in point, look at the S&P 500, which is the US. 70% of the S&P 500 is technology and financial services. 45-50% is technology. Even after all the beating that technology has had in the past year, 45-50% of the economy is technology, and the balance 20-25% is financial services. Which means what? That as economies grow, these portions are going to be much, much larger part of the economy as well as the market cap. So don't lose sight of short-term trends. Ki, acha, okay, technology has been beaten for the past 1 year or so, and therefore it's gone out of favor. No. There is a secular tailwind. If there is a correction, it's actually an opportunity to participate in a correction rather than bet against it. The other thing that is going to happen is premiumization for the large middle income group. And I think this is very important even for us as a community, as manufacturer, and as for us as asset managers. Today, fundamentally, the middle class in India is only about 80%, of which even 36% is the lower middle class. Which means what? Our average SIP ticket size is what? 3,000, 4,000, 5,000 bucks as an economy. In the next 8-10 years, we are going to 80% middle class, where the upper middle class is actually going to expand at a much faster pace. You know, we'll probably double in the upper middle class. Which means what? Which means we will have to evolve as industry players from being mere financial advisors or distributors to taking a more wealth-led approach, because our customers are going to become richer, our customers are going to be upper middle income, and we will have to evolve our practice accordingly. if you think that you're going to run only a retail practice, that's not going to work out, because the biggest bet, one of the biggest trends that's going to play out in the next 20 years is premiumization. So how much more can you upsell? How much more can you uptrend a customer from its current bill level? That is going to be a key driver of growth in the next 10, 15 years. And secular consumer growth. So I think Nimesh bhai just before this said that we are in a fantastic industry as the mutual fund industry, which industry gives you 24, and I'm with him on this. You have today majority of the country at an age of 28 to 30. They will have what, 1-2 lakhs in equity assets, or maybe 3-4-5 lakhs. As they progress towards the 60s and their 50s, this number is going to be much larger. The AUM per customer is going to go 20x, 30x, 40x. So there is a secular consumer growth. Healthcare, financial services, all allied services that you are able to give to an aging population, this is going to be a massive driver of growth going forward, and this is a massive trend to play over the next 10, 15 years. And efficiencies with new technologies. I think no matter what we say, the adoption of technology in the world is happening at such a rapid pace, it is going to astonish people. Let me give you a case in point and an example. How many of you all here have heard of OpenAI's ChatGPT? 1, 2, 3, 4 people. I encourage you after this talk, go to chat.openai.com. Okay? Open your account. You will realize they have built what is called a generative AI model. You type in anything that you want to. You can tell them, draft me a legal agreement. There will be an AI that will draft you a legal agreement on the go. You tell them, you draft me a asset allocation plan for a 25-year-old. They'll create a 25-year asset allocation plan for a 25-year-old. I'm saying, you ask me, write me a marketing campaign to attract 30-year-olds to do SIPs. It'll actually create a marketing campaign for you, and it's completely free. Now, this is what AI technology is, and I would like to request all of you to go out and experience it. It's again called ChatGPT. Search ChatGPT or go to chat.openai.com. You are going to be in awe of what they've done. And this kind of efficiency is going to come in the next 8 to 10 years. Okay? Whether we have quantum computing, robotic process automation, generative AI, these are technologies that are going to change the way we live, we consume information, we consume services over the next 8 to 10 years. And we've got to find a way to participate in these trends. We cannot simply say, "Acha, okay, ho raha hai, maja aa raha hai, theek hai, dekhne ko maja aa raha hai," but you've got to find a way to effectively and efficiently participate in these trends. What are we doing at SAMCO AMC? We also are trying to use and bring technology at the scale, technology at scale in the world of investment management. I think today we are foolish if we think only India is our opportunity. There is going to be ample opportunity. As I said, US will still continue to do well as long as they keep attracting immigrants. There is going to be ample opportunity that will be available pretty much across the world. And how do you run investment management? How do you run businesses at scale? And so our mission, and I think it's important, so for some of you who may have heard of us, some of you may have not have heard of us, I think our mission is very clear. Our mission is to help investors generate the highest risk-adjusted return over the long term. It's important to understand that we're trying to say it's over the long term by building differentiated, active, non-index hugging strategies. I think this is very important. That investors cannot do DIY. Again, if you break down our mission, you'll understand what are we trying to do. We are trying to do multiple things. We're trying to make sure that we are building differentiated products. Today, please understand, as Nimesh bhai just said in his talk a little bit earlier, there is a large part of the population which is going to digital online players, and at SAMCO we also run a securities firm, and we've seen that a large part of millennials actually come straight to us. They bypass the intermediary and straight come to us, and they want to run strategies by themselves. There's such a offtake of even algo strategies and so on and so forth, that a lot of strategies investors will be able to do themselves. Now, which is why we've said, okay, we as a manufacturer are going to be focused on building strategies that are differentiated, non-indexing. To just give you a case in point, we were the ones when we started our, we are just a fairly young AMC, not even completed a year so far, but we are the first ones to come out and talk about active share and involuntary dealing costs. We are the first ones to say, okay, we recently closed our ELSS. We said we are going to be the first ones to run a mid and small cap ELSS because all other 35 ELSSs are large cap. There is a difference that needs to be brought, that needs to be given to an investor. We were quick enough to innovate a product called Timer STP, which allows very systematic market transfer of funds from liquid and overnight funds to equity depending on the margin of safety in the market. So we are constantly innovating as a part of our mission. And how are we doing this? In 1994, I'd like to show you this picture. This is Bill Gates in 1994. He actually sat on a pile of paper to show how many papers or how much paper can sit in a single CD-ROM. At that point of time, now the CDs are obsolete. But in 1994, he showed that he had CDs in one hand and he showed that so much paper can fit in, the information on so much paper can sit in a CD-ROM. And that is also happening today in the investment world and in the technology world. Because of the power of technology, as fund managers, as investment managers, we are able to underwrite, we are able to look at stocks from across the globe at scale. Did you know that there are about 67,000 active companies in the world? So the world is our opportunity today. There is enough and more opportunity to pick at stocks, look at trends that are playing out across pretty much the world. And how tech aids us is, we probably today are the only asset manager in the country that actually takes in feed and financial information of over 99,000 listed companies globally. LSEG, so the London Stock Exchange, is our one fundamental partner as far as data is concerned. And they said, we are the first and the only asset manager which looks at data from such a wide lens from pretty much across the world. And just to give you a little bit of insight about how we look at asset management, as I said, there are 99,000 different companies. We are looking at businesses and history from 1980s. So you're looking at a rich 40, 45 years history across different operating metrics and KPIs and integrating that into business. This is how we cover businesses pretty much across the world. Whether it's global or in India, 67,000 active companies are evaluated, not just from the point of view of seeing what you should buy in India, but you will also get to understand what are the trends that are playing out across the globe and how you can apply that learning to India. This is a little... Typically, one thing that I like that Nimishbhai also said a little bit earlier was, we are in the business of risk mitigation. And what are we using all of this tech for? We're trying to understand and look at early signals of mitigating risk and understanding risk. And when we say risk, we are saying risk of 70, 80, 30, 40, 70, 80, 90, 100%. We are not saying 10, 15, 20% risk. I mean, that amount of risk is anyway going to be there in equities. But you're looking at very large risk, and how do you mitigate that kind of risk? And we internally at SAMCO have a Hexashield framework where we are using a lot of this technology and data to look at risks from 6 different lenses. So on the lens of reinvestment and growth, regulatory lens, competitive lens, governance, cash flow and balance sheet. And trying to understand that if India goes from $3.5 trillion to $10.5 trillion, and that's the way we grow market cap as well, we've got to find the survivors, and once we find the survivors in the economy, in business, and try and mitigate risk, the returns will come by itself. As a fund manager and as an investment manager, we've got to worry about protecting the downside risk and not going materially wrong and letting our winners run, because there will be time to time winners that will keep running and delivering superior returns. And our entire framework and our entire technology is aimed at trying to identify stocks, to pick stocks that can win over a period of time and continuously update data to make sure that if there is any new information, to change our case in point. You go out, update that information, and change your opinion. And all of this, as I said, I mean, we take up 1 TB of financial data every month, 100 GB of data every week, and put all of that and use technology to run the investment process at scale, to understand how you can look at companies. Today, a human analyst can look at maybe 10, 15, 20, 25, 30 companies in detail. But technology can allow you to do that at a very, very large scale, and that's what we try and do with our entire AMCO MF strategy engine and framework. So, to conclude, what I would like to say is, we are in an Amrit Kaal. We are going from $3.5 trillion in market cap and GDP to $10-11 trillion in market cap and GDP in the next 8 to 10 years. You've got to predominantly have equity exposure. You've got to make sure that you have 80, 90, 100% equity exposure in any manner or format, what you say, and that is what is going to create exponential wealth. See, we have to understand that our country needs to create wealth, not protect wealth. We have to create wealth and not just protect wealth. So, if from that point of view, holding equities is going to be the key in this Amrit Kaal. And at SAMCO, we are going to try and build as many innovative products as we can, different strategies that we rigorously test using technology that can deliver return over a 5, 8, 10, 15-year period. And we are not gunning for the 8, 10, 12%, because that 10, 12% return, the market return is anyway going to come. We are trying to see and build strategies that can generate much higher and risk-adjusted return over the longer term. And I would like to humbly invite you. So, Nimish bhai said both CEO and CIO came from ICICI to attract business. I'm going to say I'm a promoter and founder. I've come to attract business. I don't know how many promoters you're going to see in this MF DAC, but yeah, I am here as a promoter in capacity of a promoter, inviting you to join hands with us. We've got a very able team here. We are young, and you may know, young people run fast. They actually try and grow, and they punch a lot above their weight. And that's what we are going to do as an asset manager. We are here to stay. So I humbly invite you, all of you, to come partner with us, join us on this journey. We are going to be here for the next 20, 30, 40 years. And we hope that we are able to sort of bear the fruits of this Amrit Kaal together. We don't want to be stuck drinking water in this Amrit Kaal. Make sure that we are actually trying to bear the fruits of this Amrit over the next 10, 15 years. So that's it from me. Thank you so much, guys. You've been a wonderful audience. And thanks once again to the MF DAC team.
You have given us 10 minutes extra, but we started late. So we have time for you to draw some lucky raffles for the audience here. Do you want a raffle now? Yes. A promoter who gives away free raffle gifts also. That's
Lovely.
You first.
You get that here.
The hit rate has been very poor till now, so you have a chance to better it. Come, madam. Yes, you could read out the numbers.
Oh, I picked.
The last 4 digits will do.
522.
Yes.
Oh.
Come. Oh, we have got 2 winners already. 339. Yes.
I think all of them here were here for the raffles.
And one more. 430.
430.
Congratulations.
Congratulations. We have one more.
Thank you, Mr. Modi. Thank you. Thank you, sir.
Thank you.
Thank you. Wonderful.
Thank you so much.